Hey everyone, welcome back to Corporate Decoder, the place where we sift through the corporate filings so you don't have to. Today, we're diving into Lazard Retirement Series' latest shareholder report. It's not as exciting as a new movie, but let's see if there are any hidden plot twists about your retirement savings. This report covers the financial year ending December 31, 2024, and it's packed with info about several Lazard retirement portfolios. Emerging markets equity, global dynamic multi-asset, international equity, and U.S. small cap equity select. Think of these as different flavors in your retirement ice cream cone. First up, let's talk about costs, because who likes paying more than they have to? The report breaks down the expense ratios, or how much it costs to manage your money for each portfolio. For example, if you had $10,000 invested in the Lazard Retirement U.S. Small Cap Equity Select Portfolio Service Shares, you would have paid about $118 in expenses. That translates to about 1.12% of your investment. These costs eat into your returns, so it's good to keep an eye on them. It may not seem like much, but it adds up over time. Next, let's peek at how the portfolios actually performed and what impacted those results. For the Lazard Retirement U.S. Small Cap Equity Select portfolio, stock picks in the information technology sector weren't the greatest, dragging down performance. On the flip side, investments in the energy and financials sectors did well. Think of it like a baseball team. Some players hit home runs while others strike out. Looking at the Lazard Retirement Emerging Markets Equity Portfolio, stock selection in Brazil, Korea, Mexico, and South Africa added value. However, not having enough investment in Taiwan hurt performance. It's a global game, and where you invest matters. The report includes a performance chart showing how a $10,000 investment in each portfolio would have grown over the past decade. It also shows returns compared to benchmarks like the Russell 3000 Index and MSCI Emerging Markets Index. Remember, these past figures don't mean you're guaranteed similar results in the future, but they're useful context. The report also provides average annual total returns. For the one-year period, Lazard Retirement U.S. Small Cap Equity Select Portfolio service shares yielded 11.12%. The Russell 3000 Index, meanwhile, returned 23.81%. The Emerging Markets portfolio showed similar trends, the portfolio's one-year yield being 7.68%, just slightly above the MSCI Emerging Market Index at 7.5%. These numbers are important since they show how well your investment is doing compared to other similar investments. The report gives some additional numbers such as total net assets, number of holdings, and the portfolio turnover rate. This can tell you how actively a portfolio is being managed and might hint at risk. For example, the Lazard Retirement U.S. Small Cap Equity Select portfolio has a fairly high turnover rate of 98%. This means the fund is frequently buying and selling assets, which can lead to additional costs. It also lists top holdings. For the Lazard Retirement U.S. Small Cap Equity Select portfolio, the top spots included BankUnited, StepStone, and Wintrust Financial. You can get a sense of where your money is. Sector allocations, such as the focus on financials in this portfolio, at nearly 20%, are also shown. Things change. Be sure to read the section on material fund changes. Since the last annual report, Lazard agreed to waive certain fees to keep total operating expenses below a specified level for some of the portfolios. Finally, there's a reminder about householding, which means that if multiple people in your household invest in the same funds, you might get only one copy of important documents unless you ask for separate copies. You can contact Lazard and ask for separate copies. One critical change to note. The investment manager agreed to reduce its fee from 0.80% to 0.75% on average daily net assets. It might seem small, but it can reduce your cost. So after decoding this filing, what's our take? Lazard Retirement Series offers a range of portfolios with varying focuses and strategies. I would say that while their emerging and international equity funds are underperforming their benchmarks, the relatively low portfolio's costs and low management fees might make this an overall beneficial long-term choice. However, it might be wise to diversify and pick funds from other institutions too. As with any investments, there's no one-size-fits-all, and your financial situation will be a big deciding factor. If you found this helpful, please give this video a like, leave a comment with your questions, and subscribe for more corporate deep dives.